Sectors will be impacted: aviation, chemicals, paints, tires, cements, oil and gas, but investors must check movement in IT and defense sectors as well. We can track below stocks and keep them in your watch list. Hello everyone, welcome to Smart Trade Wizard. We have brought today current hit topic of the world. In today's video, we will see Iran-Israel war and its impact on India. Firstly, let's understand why Iran-Israel are going for a war. The Iran-Israel war is an ongoing armed conflict between Iran and the Houthis against Israel and the United States that began on June 13, 2025, when Israel launched a surprise attack targeting key Iranian military and nuclear facilities. Israel views Iran as an existential threat on account of Tehran's rhetoric, its support for proxy forces in the region, and its arming and financing of Palestinian groups such as Hamas. Next one, what is Strait of Hormuz and its impact if closed in coming days? The Strait of Hormuz lies between Oman and Iran and is the primary export route for Gulf producers such as Saudi Arabia, the United Arab Emirates, Iraq, and Kuwait, Israel. US President Donald Trump had previously said he would take up to 2 weeks to decide on US involvement. That decision, it seems, has now been made. The Strait of Hormuz handles around 20 million barrels of crude oil per day, nearly one-fifth of global daily consumption. Ships can avoid the Red Sea by sailing around Africa, a longer route, but it could be a safe journey. However, there is no way to ship anything by sea out of the Gulf without going through Hormuz. Even countries that do not import petrol from Gulf countries would be affected if the strait were to be closed, because a major drop in supply would spike the price per barrel on the global market. Nearly two-thirds of India's crude oil and half of its LNG imports pass through the Strait of Hormuz, which Iran has now threatened to close. Nearly 30% of India's westbound exports to Europe and the US pass through this route. A rerouting around the Cape of Good Hope could extend shipping time by 2 weeks and sharply raise freight costs. The next point is very important, and many fail to understand its relation with crude oil. So let's understand impact of Iran-Israel war on crude oil. The ongoing Israel-Iran war has put global oil markets on edge. While no major supply cuts have occurred yet, the threat of a blocked Strait of Hormuz and rising shipping costs could keep oil prices high in the coming weeks. Investors and countries alike remain watchful of any further developments. Crude oil prices are already up by approximately 12% after Iran-Israel conflict started. Crude oil price reached a high of $78.45. JP Morgan has warned that crude oil price may surge to $120 per barrel if the conflict escalates. In this weekend, we can say it has been escalated. As per latest news, US launched targeted strikes on 3 Iranian nuclear facilities, a move President Trump hailed as a spectacular military success, which has significantly escalated Middle East tensions. Oil prices are expected to spike and potential for broader economic consequences, as Iran has retaliated with missile strikes on Israel. India is world's third largest crude oil importer. However, India doesn't import Iranian oil since 2020. Let's look at the chart. India imports crude oil from this list of countries. We can see India imports from Russia, the most, followed by Iraq, Saudi Arabia, UAE, and USA. Hope now you have got a clearer picture of whole scenario of Iran-Israel war. Now let's get back to our Indian stock market. Experts suggest that the US economy and global markets were unprepared for this sudden conflict, which could weigh heavily on overall investor sentiment across global stock markets. It has been advised to be cautious for all investors trading in the Indian market, as there will be high volatility in this vehicle. We can see VIX rose by 4% today due to high volatility. As far as Monday's session is concerned, Nifty 50 opened at 24,940, almost 1% down, sided down further to today's low 24,825 due to bearish outlook, and then recovered back to today's high 25,050 once UK markets opened, eventually closed at 24,972 level. It was not a big fall as per expectations, as Indian market is strong enough. Key uncertainties ahead include the rise in crude oil prices, global shipping lanes, and how RBI takes further measures for domestic policy. Sectors will be impacted: aviation, chemicals, paints, tires, cements, oil and gas, but investors must check movement in IT and defense sectors as well. We can track below stocks and keep them in your watch list. But we would like to give a disclaimer here that please check with your financial advisor before taking any position. This is not a buy or sell recommendation. This video is for educational purposes only and is not intended to harm, injure, or defame any individual or entity. IT stocks, TCS, Infosys. Defense stocks, CHAL, BEL. Gas stocks, IGL, GAIL, MGL. Oil and gas production. Stocks, ONGC, Chennai Petroleum Oil India. Oil marketing stocks, BPCL, Hind Petro, IOC. Aviation stocks, Indigo, SpiceJet. Paint stocks, Asian Paints, Burger Paints, Indigo Paints. Tire stocks, Apollo Tire, JK Tire. Hope you liked this video. Make sure to hit the like button. Also send your queries in the comment box. Also subscribe to our channel and turn on the notification bell so you never miss an update. Thank you for joining us today and we can't wait to see you in the next video.